Hey YouTube, what's going on? It's Patrick here at VectorVest, and today I'm going to be shedding some light on what's going on in the market. If you're not familiar with me, I interact with our customers and different traders out there every single day, all throughout the day on multiple different fronts. And the one question I get asked constantly, it seems like nowadays, is the market about to crash? With the talks of inflation, everybody seems to be worried about what's going on in the market. And so I thought, what better place than here to bring you an update and to show you guys what actually is going on and hopefully set some of that fear to rest. So if you're ready to find out more about what's going on in the market and find out if we're about to crash, make sure to stay tuned as we jump right into it. And before we do that, as always, hit that like button, hit that subscribe button, turn on that notification bell so that way you get updated every time we come out with new content, which is pretty much on a daily basis. And let's get into it. All right, welcome back everybody. So before we take a look at the data and see what it tells us, I first want to get everybody familiar with the actual factors that drive the market. We're going to start off here today with an essay from our founder, Dr. DeLito, that was written back in March of 2003. And this essay was called The Truth Chart. And the Truth Chart really tells us on a macro level where the economy currently is, or more specifically, where the market currently is. So as he talks about, the stock value is driven by earnings, inflation, and interest rates. Those are the three components that really affect the overall value or pricing of a stock. Value rises when earnings go up and inflation and interest rates decline, which we've seen over the last 10 plus years. Typically, a strong economy leads to rising earnings, which is good, and rising inflation and interest rates, which are bad. So as a retail investor, earnings going up is a good thing, and inflation and interest rates are a bad thing, which is why we're seeing more and more headlines talking about inflation and the rapid inflation that we've seen over the last few months. But he goes on to write, so investors are constantly balancing these factors against each other. And he puts it in a simple to understand chart here to break down bull and bear markets. Nowhere else out there makes it as clear and concise as VectorVest. And here he gives exactly what's going on. So he has cases 1 through 8, 4 different stages of bull markets, 4 different stages of bear markets. And then he has earnings, inflation, interest, and price. And you can see when earnings and inflation go up, but interest rates are going down and prices are going up, that's typically the beginning of a bull market. When earnings are up, inflation is down, interest rates are down, and prices are up, bull market's thriving at that point. And a case 3 very rarely happens when you have earnings going up, inflation going down, interest going up, and prices going up. So very rare to see just interest rates increasing without anything or without inflation increasing. And then 4th, we have the bull market ending when earnings are going up, inflation's going up, interest rates are going up, and prices are going up. Sound familiar? But then we start to get into where the bear markets begin. The bear markets begin when earnings, keep in mind, earnings, the friend of an investor, start going down, but inflation is going up, interest rates are going up, and prices start going down. This is why people keep an eye on inflation. This is why you've seen all the headlines talking about it recently. Basically, if inflation is going up more so than earnings are going up, earnings are actually losing money at that point, or companies are starting to lose money, their earnings aren't as strong, and that hurts the overall price or value of that stock. And then we get into a few other aspects of the bear markets, which if you're a VectorVest subscriber, you can simply pull up this essay from back, once again, on March 21st, 2003. If you're not a VectorVest subscriber, I strongly urge you, especially if you're worried about inflation and is this market about to crash, to go use the link down below, sign up for the trial because we update you on this on a weekly basis. So just by having VectorVest, you'll never have to worry about this going forward and you'll make sure you're always on top of things. So as we move on, let's go see where the data is or what the data is telling us at this moment. So if we go ahead, just pull up a chart of all of this. Because if you're like me, I'm a visual learner. Being able to see it definitely helps drive the point home and helps clarify a lot of things in my opinion. So here's our market climate graph that can be found inside of VectorVest 7. At the top, we have a 50-day moving average of earnings per share of the S&P 500. Below that, we have what we call the ETI, the earnings trend indicator. Just like with a lot of other indicators we have here at VectorVest, we take all the data out there that one would typically have to go over themselves, compile it to come up with a simple to read indicator based on a scaling of 0 to 2. So above 1 is good, below 1 is bad. If you can remember that, VectorVest will make your life a lot easier. So looking at the earnings trend indicator, and this is over a 5-year basis, keep that in mind, we do see earnings or the earnings trend indicator steadily rising. But then right below that, we have the S&P 500 index, and then below that, the CPI or inflation, if you want to look at it that way. So, if inflation, as we can see here, has really been ramping up ever since about May, June of last year, and earnings are steadily ramping up, why is the ETI steadily moving higher as well? Well, it's simple. When you look at it right now, yes, inflation is starting to become a potential factor that people need to be aware of, but it's not as big of a factor right now at its current levels to really dampen corporate earnings. So therefore, earnings are outpacing that inflation. Therefore, earnings are still good. And as we know, earnings is going to be the engine that drives stock prices higher over time. Now, putting this into perspective, we see a lot of talk about inflation currently. You have a lot of worries. We've seen the markets just steadily moving higher ever since the March lows of last year. And yeah, a correction may be due, but from a macro level, we are far from an actual bear market, at least for the time being. Things could change, but if the market does start to sell off, which we've already noticed of lower highs and lower lows and other videos that we've talked about here, then expect to see a correction and utilize those opportunities as a dip, to say it the best, buy the dip if you will. And the VectorVest market timing indicators that we've talked about over on our live streams and other videos that we've done here will help you know exactly when to time that bottom to make sure that you're getting in at the right time and maximizing your returns. So to quickly recap, do I think the market is due for a correction? Yeah, we've seen a lot of bearish divergences. We've seen stocks do nothing but go higher currently. We've seen the market being inflated by debt. And so for the time being, yeah, we could still see a correction in the market. But nobody knows exactly how long that'll last for. And if anybody tells you that they can predict that, my best advice to you is to turn around and run as fast as you can. So now, hopefully this will help put everybody's fears to rest for the time being. And once again, if you are worried about inflation, if you are worried about the market crash, just remember, VectorVest has been around for 35 plus years and we've never failed to signal a major market correction and got our subscribers in and out of official tops and bottoms within about a week or two. So if you're worried about the market crash or if you're worried about what's going on in the market, VectorVest is the perfect tool for you. So click on the link down below, sign up if you're not already signed up with the VectorVest system. Now, I'll give you guys one last pro tip for sticking around towards the very end. And that is if you're wanting to know when to buy the dip, well, if we jump out of here and get back into the VectorVest software, go to the home page. On the home page, this is looking at strictly the market timing aspect. I talked about it today in a live stream earlier this afternoon. And really the key is keeping your eye on the MTI. Now, when the MTI gets to a level of 0.6 or below, that generally shows the market's looking for a bottom. Well, we haven't hit those levels, so therefore we still may see some more downside coming into the market on the short-term basis, but be prepared, and if you have VectorVest, you'll be ready for it, and you'll know exactly how to take advantage of that to buy the dip and maximize your returns. As an added benefit for being a VectorVest subscriber, once again, you get the daily color guard report down here right on your homepage every single night where we recap what's going on in the market today, what to expect for tomorrow, what news you need to be aware of, and how to prepare yourself for the next trading day. In essence, this will make sure you never get caught off guard with what's going on in the market. And then on a weekly basis, every Friday night, we also update you on the macro view or the market climate view of what's going on in the market. So that way, if there is a change in the overall climate of the market, maybe a shift from a bull market to the bear market, we'll always keep you up to date so you can make sure you stay on the right side of things. So Hopefully you've enjoyed today's video. If you did, don't forget, as always, smash that like button, hit that subscribe button, share this with your friends, share this with your family, and until next time, toodles.